So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling free world. Hope everybody's having a great weekend wherever you are, whatever you may be doing. 50 pips, rocking and rolling here. So let's do this. So, 14th of October 2018, we're going to a week with fairly steady data. We've got FOMC minutes, we got a couple of central bankers speaking, and we've got an awful lot of event risk out of Brexit with cable GBP pairs gapping here into the open. Italy, a lot of headline risk there. We've got a lot of headline risk with Saudi Arabia, with everything that's going on. So again, across the board, midterms coming up, the whole scenario is full of event risk. So it's very possible that you get tape bombs. So it's tricky to hold bigger position trades, but it is what it is. Now, looking at the equities, I think here the most interesting thing to keep in mind on the equities is that, of course, you see that these 200s, pretty much 200-day moving averages, seem to have saved the week as far as ES, YM, and NQ are concerned. Now we very heavy close on Russell. We've discussed this in detail, so I'm not going to go back in detail on what's happening in the Russell. Now, why do I have these charts up? Now, the only thing I want to repeat, I think what is important here to keep in mind is we think that the move still has some legs to go, but where it can get ugly is if we start getting daily closes below these 200s and these round numbers, and especially the week closing below this level. And the levels we're looking at is 2,700 on the ES, 25,000 on the YM, and 7,000 on the NASDAQ. You see how once we went through the 1,600 on Russell, how the selling really intensified and we never look back. So again, we think these are the key numbers to keep an eye on here. And if you're trying to fade tactically, these need to hold. If these numbers break, you expect to see a lot of selling coming into the market, especially from the systematic trading, a lot of CTAs starting to liquidate long exposure if we start to get these daily, weekly closes below the 200 days. Now, the other thing to keep in mind is if you're looking at let's see here, what do we have? If we're looking at the SPX, right, just because I'm not going to do all the indices, not an awful lot has happened, is the bottom line, it's a very similar scenario. We were stuck inside the yearly range, we tried to break up, and this is a false break. We failed to break above. So here, we're looking at this as just a range. To a certain extent, the moving averages in the middle of the range are just a little bit of noise. Now, there is some importance. We'll discuss this week a little bit more. But essentially, we're treating this, and as we discussed, we're treating this as a range. So our base case is now that the upside has failed. We expect market to come and test mid. We consider that pretty much done here. And now, as long as that holds, we expect the market to test the opposite side of the range. Okay, so that's our base case scenario. Now again, if we can't hold this 200, we expect that retest of the bottom end to come extremely quickly. Now it's still too early to look at the bigger picture. I may do a video on that this week, but right here the focus is all the same. As long as these recent highs hold, there's room to the downside. And how much room? Well, our base case is yearly lows. So pretty much, depending on the indice, we've kind of gone halfway. There's still another half to go. So don't forget that even if this is a correction, the rallies can be very aggressive. So you should not be surprised to see this potentially rally all the way back into these yearly highs and then try to complete the move, right? So we've sold off decent off those highs in the sense that we've had oops, what's happened here? This not working. Let's see if we can reload this. So off those highs, basically, we had a decent little correction. That was about a 7% move. Let's see. Hold on. Looks like trading view. Oh, there we go. So we had about a 7% correction, right? 7-8%, and we think the full move is probably 14 or something. Then it could get, a lot of things can develop, but we're looking at a range trade. So again, that's what we're looking for, but don't be surprised if off these lows here, we move, up 5 or 6% in a very violent manner, because that could still be just a little bit of a retracement to still hold these highs, and then we go back down. So you should not be surprised, unless it's headline and it gets aggressive quick, to see sharp rallies, even if this is essentially a bigger move down. Now, one thing which is important to note here going into the week is what are the major charts. So we look at the ES. Now, don't forget that world markets are trading very, very heavy. Now, we've seen some basing patterns on stuff like the DAX, the Euro stocks, and we'll have to see how the news flow goes early this week. But you have to keep in mind that globally, we've still got some very, very ugly action. Look at the Shanghai Composite here. This is a very ugly move, and this is entailing that we could possibly have to retest all the way lower if this breaks hold, right? And this is a very, very ugly move, because all the way back into those lows is giving you another 20 to 30% correction. Now, that would be one ugly move. Now, it doesn't mean we can't rally, but especially on an intraday basis, as long as we hold below this breakdown zone, things could stay very, very heavy and very, very ugly. Now, what's the other part of the puzzle? Well, the other part of the puzzle is a lot of people are looking at gold. Now, our base case is still that gold is ultimately trying to rotate higher. We would not necessarily be buying here. We don't expect this to move in a straight line. We would not be surprised to see this coming all the way back down into this very congested area and then rotating higher. Now, remember, there's a lot of wheeling and dealing on USD CNH. If you're trading gold, our suggestion would be this is your gold chart, and make sure you have USD CNH on the other side of your screen. Split your screen. There are two things we'd be looking at: is USD CNH to trade gold, and the other one everybody's familiar with, the Nikkei and the USD JPY, which has given us that beautiful trade with that failure on the weekly, right? So again, gold bid, this is a very aggressive move on sharp volume, so you have to pay attention. So any move down after that kind of action, you would expect it to get bid to ultimately rotate higher. Now, the other part of the puzzle is our bonds. Now, bonds, we'll have to see if we've put in a structural bottom or if this is still going to break down heavy. Now, remember, as we came back into these lows, we were looking for some kind of a bounce. This is a huge level, and we've put a fairly nice attempt to reverse right here when we talked about around the 138 mark. Daily, weekly closes below. We would expect the 130, this 200 on the monthly to print to be a very ugly move. And if this happens, you have to be very cautious, because obviously that's going to light a fire under the USD. So, this is the big piece of the puzzle with respect to the USD. But if, as we think here, right, you see this bonds are trying to bounce for a little bit of a correction, and then we'll have to wait and see if they're actually going to hold that bigger channel or if they're going to move down. That means that also the USD has a chance to complete this move we're looking at. So right now, going back to the USD, our base case has been that this has to correct lower, and we'd expect it to try and come and test the 50-week moving average. So for us, all these moves into that's 96 was a sell zone for the rotation back lower, and it's trying to play out. It's fairly constructive. We'll have to see. Keep in mind that the week could be very, very choppy. Now, don't forget that the problem is really going to be, how do the headlines, what do the headlines do? And especially on the equities, are we selling off on equities because there's a huge panic on the bonds, or are we selling off on the equities because we're selling off on the equities and the bonds are catching a bid? it's a completely different scenario, especially for USD, right? But look at what's trying to happen here in terms of some of the commodity currencies. And it's a really tricky call, but they're trying to base. Look at Australian dollar. So this is a chart we've been looking at before, and you see here how it's trying to base. So in the same way we've discussed about that false break on equities or the false break on DXY, etc. If this holds, this is pointing to the fact that this is trying to base to try and come back once again into those 72s, 73s. If you look at Kiwi, NZD, USD, here we go. Very, very similar kind of, it's the same chart across the board really, right? We came back down into this zone where it broke below the 6500. If it can't hold the breakdown, right, then the assumption would be that we've got some room up to travel, and that would be that DXY completing right into the 50. If you look at USD CAD, another tricky one also because of what's going on in crude. Let's see if this loads. It's the same thing, right? You had all these false breaks. If this continues to hold, it looks like we've got some move down back into the 200 here. So a lot of things will likely continue to be choppy here, but there are a lot of interesting moves. I think the most interesting, and we can go send me an email if you want me to do a video on this. We can discuss this in a little bit more detail. But remember, the focus this week, especially to try and get a feel for what's going on and on the charts, is that bond stock relationship, right? Are we in a situation where the bonds continue to sell off and stocks get spooked and those stocks get dumped hard? Or are we in a situation where those bonds can finally rally, bounce a little bit, and then the stocks can move independently, right? Back up or back down. But really the bonds, that's the key component, because that's what's going to be influencing those USD moves, which in turn is going to influence all those other swing trades we have on and we're looking at. So again, a lot of moving parts, very, very interesting. I suspect the theme for the week is going to be purely 100% headline risk. What comes out of the headlines, Italy, Saudi Arabia, Brexit, etc., and how that how that drives everything. But again, a lot of interesting stuff. Keep in mind from the last video we posted last week, midweek, all those trades are in play, whether you're looking at the yen, the crude, right? The very nice action on crude, et cetera, et cetera, et cetera. Everything's still in place. So let the market breathe, let the market do what it has to do, and we'll update if anything moves. Have an awesome one, guys. Bye-bye.